Earlier in the show, we told you that consumer confidence has risen for the months of March. Well, for more on the topic, we're here with the Conference Board's Lynn Franco, Director of Economic Indicators. Thank you for joining us tonight. A little bit of a mixed message that we get out of the report. On the one hand, it seems that American consumers are confident about the future or more upbeat about the future. But when it comes to current conditions, the sort of impression about current conditions among U.S. consumers has gone down for the past 2 months. So what's going on?
Well, I think what we're picking up with the present situation is the softening that we see in the first quarter. Expectations, I think, are being fueled really by the labor market, and expectations are that we're going to continue to add jobs at a robust pace. We've seen a little bit of the uptick in income expectations as well, but consumers are still weary both in terms of the present and expectations in terms of business conditions.
Now, speaking of the first few months of this year, the first quarter, we're seeing that a lot of economists are lowering their outlook for GDP growth. Is it mainly weather-related, or is there something else going on?
Well, I think that still remains to be seen, but we do know that the weather has had an impact, and in particular, it's had an impact on consumer spending. We've seen weak retail sales for 2 months in a row. So the real question is what happens in March and April, and that, I think, will really lead us, in the right direction as to whether it's temporary or a little bit more permanent.
Longer term. Okay. And then gas prices. Gas prices have fallen dramatically over the past year. They're up slightly, up 25 cents a gallon since the beginning of the year, but that's marginal. I mean, how come we haven't seen more spending thanks to these overall lower gas prices?
Well, we actually did a survey on this, and what we found is that people think this change is temporary. So I think as they begin to realize that it's more permanent, that we're going to continue to enjoy these low prices, I think we'll begin to see a little bit of a boost in terms of spending.
Okay. Overall, though, would you say that Americans, we're in a tricky spot, of course, because our economy is driven by consumer spending, but on the other hand, we don't want to get into too much debt like we have in the past. Where do we stand right now since the financial crisis? Are Americans getting better at saving, or are they spending as much as they were pre-recession levels?
Well, they're not spending as much, and you're still sort of undergoing a deleveraging. But I think what we're seeing is this, savings rate of 5.8 is not going to be maintainable. So I think with a little bit of wage growth, a little bit better expectations, we're going to begin to see them pick up spending in the next quarter.
And then who specifically is going to be picking up spending? Is it people who have invested in the stock market, who have seen very nice gains, or is it regular Americans who have seen marginal higher wages?
Well, I think you sort of have this tale of two consumers. So, the more affluent consumers' spending is being driven by increasing home prices, by increases in the stock market. Those sort of on a tighter budget, that's where gas savings are really going to come in and play a key role, as well as wage growth.
And then speaking of homes, we saw that in January, the price of homes rose 4.5%. Great, that's nice that we're seeing it go up. But as compared to 2014 in January, which was up 10.5%, it's marginally, it's not that much growth in terms of price for homes. Why aren't prices rising more rapidly for homes right now?
Well, I think what we saw in 2014 we knew couldn't be repeated. So I think these are much more sustainable rates as we go forward. So I think overall that's still positive news.
And then in terms of, since homes seem to be Americans' largest asset, if we are seeing prices increase, will that mean should that have a positive impact on consumer spending?
Well, it's having a sort of a positive impact on homeowners. When you take a look at sort of the flip side of that, those, trying to purchase a home, we know credit still remains tight. We've got interest rates that are likely to uptick, come September. So that could restrain a little bit of spending on that side.
Okay, and in terms of what else is, big news has been happening this year, the dollar, U.S. dollar very strong against a basket of foreign currencies. Is this positive or negative in general for consumer spending?
Well, it's making, imports a little bit cheaper. But again, then it becomes, comes down to affordability and whether or not Americans have that discretionary income and that willingness to spend as well.
Okay. And then looking forward, we've got the big jobs report coming out on Friday. And we're going to find out what the employment rate, the recent unemployment rate is here. Where do you see it going? And what point are we going to see the unemployment rate really put pressure on companies to increase wages?
Well, we expect the unemployment rate to continue to trickle down throughout the remainder of the year and strong job growth. We still feel there's some slack left, so wage pressures, hasn't really grown as much as we forecast it to grow. Possibly by year end, we begin to see a little bit better wage growth, and that then will also translate into a little bit of boost in spending.
Okay, so I'm hearing very positive outlook from you. What could possibly derail this growth that we're seeing?
Well, I think positive in the sense that we expect sort of, the trend to be more sort of the medium-term long growth rate here. We're around 2.5% or so. So we don't expect 5% growth or 4% growth, but a little bit more sustainable growth around 2.5% for the remainder of the year.
Okay, and in terms of what's the wild card? What could potentially go wrong that could?
There's always a shock. I mean,
Right.
We've seen that in the past. There could be some sort of a shock. For now, we don't foresee any shocks. We think we're on pretty firm footing, but we just think that we're going to sort of settle into this sort of slower but more sustainable growth.
All right, Lynn Franco, thank you so much for joining us. That was Lynn Franco, Director of Economic Indicators at the Conference Board.